Earlier this week, we told you about a concerning trend happening across the country. Recent data from the Fed showing auto loan delinquencies at their highest level since 2010, 15 years ago. Those late payments can be due in part to high car prices, higher monthly payments on car notes, and high interest rates. Okay, joining us now to talk about what's going on and what you can do if you're having trouble paying your car loan, certified financial planner and consumer finance expert at cardrates.com, Bobby Rebell. Bobby, thank you for joining us. Can you tell us more about what is really going on here, the story behind the numbers?
Yeah, well, first of all, thank you for having me, Jacob, and good morning, everyone. So what happened here is that a lot of loans were getting better at paying down, but car loans and student loans, I should say too, but car loans is what we're talking about today. This has gotten a lot tougher for Americans. We had a bit of a break during the pandemic, so people often were able to pause payments on those loans, but now coming out, cars got more expensive. There's a lot going on in cars, a lot of new technology, and then interest rates were higher. So what's happening is we've got more people taking out loans. Loans are longer, the numbers are bigger, and they're really putting people in a tough position. And this is really weighing on American finances at a time when the unemployment picture is unsteady at best. So people have budgets that are already stretched and they're struggling.
So I see here the average selling price of a new car higher than $50,000. This is for the first time ever. I'm guessing that, as you mentioned, has an impact on the delinquencies.
Yeah, so what's happening is car prices, $50,000, that's a lot of money for people. And there's a reason for that. Look, we can talk about tariffs and all of these other things, but cars are kind of, I hate to use the word fancier, but there's a lot more going on there, Jacob, right? We have amazing technology. So for example, a bumper used to be made of plastic or metal even, right? Years ago. Now it's got sensors in it. So there's a lot more going on. So that's just more complicated to build these cars. It's advanced technology. It's more expensive to repair. And of course, even if you're buying a used car, it is just more expensive to buy. The numbers are bigger, so more people are financing and they're taking out longer loans to spread those payments out and hopefully make them a little bit easier to swallow. But obviously, it's still something that people are struggling with.
Does this, how long, I don't know quite how to ask this, but how long can this last before, I don't know if, I know as far as the housing market a long time ago, they called it like a bubble bursting, and this is not the same thing, but does this just go on forever? What's going on?
Yeah, it's a really tough situation. Well, the good news is that interest rates are starting to go down. So even if, what happens is the inflation hits the car, so the car price gets higher, and even if the rate of inflation goes down, it's not increasing as much. The car price is what it is, Jacob. But with an interest rate that goes down, the relief we could see is that you could refinance, or if you're taking out a new loan for a new car, that rate, the interest rate on that might be a little bit more affordable. And then we might see people really rethinking how many cars they need in the driveway, right? We have families where you have mom, dad, and then maybe you have a couple teenagers, and maybe the teenagers are sharing a car. Maybe if they're lucky, they have two cars, and people say, well, we can afford it, but with all the other costs, and we're not even talking about car insurance, which is also a big thing. It's just too expensive. Maybe we're going to start carpooling more. Maybe we're going to coordinate our schedules and, spend a little more together time in those cars.
There we go. Okay, how about some other ideas for, let's say we're behind on car payments? Some tips.
Communication is your friend. Make sure you are talking to your lender and seeing if there's something they can do for you. It sounds crazy to say, but they really on your team. They really are on your team. Lenders do not want to have you default. They don't want to start coming in and repossessing cars. They want to work something out. So they will often renegotiate the terms of your loans. Maybe they'll give you a break if there's something exceptional going on, like you lost your job or something. So you can refinance, you can downsize. We just talked about that. Have a little bit, maybe some fewer cars. You can use local resources that may be able to help you work out different kinds of payment plans. But I do want to urge people to protect your credit score. And by that, I mean, work with the credit agencies, work with whoever has loaned you the money for the car, and make sure you never miss a payment, or at least work out something where you have a minimum payment. Because if your credit score goes down, your future loans are going to also get more expensive, and we don't want that. And then finally, if you are not so pinched, and I know this is hard, have that emergency fund. So when you do fall short one month, you have a little wiggle room.
Great advice. And the simple tip to communicate, just ask. The worst that can happen is they say no. Bobby Rebell, thank you so much for joining us.